Well, hello, everybody. Welcome to this edition of Market Insights. It is July 14th, and the market just kind of keeps humming along. A lot of resilience. I mean, there's decent reasons for the market to be pulling back, but it's not. So we'll enjoy the ride for as long as we've got it. Anyway, Steven Sitkowski here. And a quick reminder that everything that we do is for educational and informational purposes only. It is not intended as investment advice. So what's moving the markets? Well, the markets are betting, not the Trump, that Trump will give on tariffs. I mean, it's really sort of interesting to me that you have the market basically saying, we don't believe what the president says. No disrespect intended, not a political statement, a statement of fact. So we're talking about Trump sent out a letter to the EU. There's going to be a 30% tariff, same with Mexico, apparently starting August 1st, but you never know those dates because he keeps moving them around. And it reminds me of the parent that says, if you do this, I'm going to do that, right? So you do something wrong, that's it. You've got to sit in your room for an hour. And then 10 minutes later, the parent walks in and go, well, why are you in your room? Oh, I don't know. I thought I'd catch up on some reading. Hey, why don't we go to the movies? It's exactly what it feels like. Otherwise, if the market truly believed that the EU is getting hit with a 30% tariff, I think the market would be pulling back, but it's not. We have a slew of earnings announcement due out this week. You know the old saying, earnings are the mother's milk of the stock market. As earnings go, the market goes. Basically, if the market were in a vacuum and you weren't dealing with politics, geopolitical events, the Fed, but it's always fun to see how corporate profits are doing. Bitcoin tops 120,000 for the first time ever. If you want to play Bitcoin, there's a number of different ways to do it. There's a pure Bitcoin play. There's an ETF, IBIT, that basically is a proxy for Bitcoin. You could play some of the Bitcoin and crypto stocks. That's another way to do it. The 10-year Treasury, pretty stable at 4.41, and oil prices are down just a little bit, hanging in the high 70s. Nothing remarkable there one way or the other. Market breadth, fantastic. Look at the number of new 52-week highs versus 52-week lows. So that's on the New York Stock Exchange, 264 to 35. On the NASDAQ, 453 to 157. Very impressive. That's just indicative of a bull market or confirmation of a bull market. Here are some of last week's big winners. Delta, which confirmed their guidance for the year. Moderna, I don't know, they must be getting ready to give us some more vaccines. PTC, I don't know anything about them. AES, Tapestry, Southwest Airline, Coinbase Global, there you go. Dollar Tree, Halliburton, energy related, and Milrose Properties, that is a REIT. So those are the biggest winners, gains anywhere from 6.5 to 11% for the week. Strong bull market. Check it out. We've been in the bull for 1,000 days, and 74% of the market is higher. Fourth best start on record. So you gotta love that. We're up 74%. And I think the bull market started October of 2022. 74% gain. Hope you've gotten your share. What should we be watching this week? Pretty robust news week, I will tell you. You got the inflation data coming out, CPI. CPI year over year. So we have month over month, year over year, supposed to be higher. And the core CPI, which core is supposed to be up to 3%. Empire State Manufacturing, not supposed to be as weak as it was last month, then a bunch of Fed speak, then more inflation. Producer Price Index, that is inflation at the wholesale level. So Tuesday and Wednesday, going to be pretty big days. Then Thursday, we have initial jobless claims. We have U.S. retail sales, see if the consumer is still spending. They're expecting that the answer to that is yes, and a bunch more Fed speak, and then some housing data on Friday. So lots to be watching this week. They could definitely impact the market. Last week's heat map, big winner, Tesla in bright green, Palantir. So Tesla's up almost 7%, Palantir 4.43, Boeing 5%, GE almost 5%. We definitely see more green than red. We did have some pretty significant losers, however. ServiceNow down a bunch, Accenture down a bunch, financials were down. Year-to-date returns by sector, so the S&P is up 6.38%. We have 2 sectors down, 9 sectors that are higher. With industrials, with all the industrial production going on, especially as it relates to AI data centers, that is up 14%, communication 9.5%. Tech is up 9%, utilities close to 9%, financials 8.5%, materials, staples, even energy is on the plus side now. So the only 2 that are down, healthcare and discretionary, and candidly, they're not down by much. Market sentiment fell off a little bit from last week. It dropped from 45% bullish to 41.4, but is still well above the average of 37.5. So people feeling pretty good. And the rally is expanding. Stocks trading above their 200-day moving average of the S&P 500 now is almost up to 60%. Obviously, we want that above 50%. Let's take a look at the charts. See what we got cooking. Here is the S&P 500. And everything on that, looks great. It sort of looks like we might be forming a top here, a bit early to tell, but we kind of been bumping that level, but way above our 50-day moving average. Definitely strong upward momentum at the moment. Little pause for the cause. I'm sure all that is tariff stuff. And then I suspect what's going to take over will be the earnings announcements. And let's take a look at triple Qs. They look exactly the same as the S&P. Nothing any different there. So all in all, things are civilized. And you know what? I'll take civilized. Makes it a lot easier to trade. All right, gang, thanks for hanging with me. We will see you next week. Till then, be safe, be blessed. Bye for now.